Morning, Bill here with the Metals Minute. Today is Friday, June 3rd, 2022. Well, the inflation monster is raging and expected to be alive for an extended period of time. Contrary to what we were told initially and what, of course, most anybody would want, inflation is set to continue on, especially in the food and in the energy sectors. Now, those sectors have been minimized in the official inflation calculations, but even so, inflation levels that they acknowledge are stubbornly consistent. We've had different people such as the Treasury Secretary, Janet Yellen, and the Fed Chairman, Jerome Powell, have both admitted that inflation is more stubborn and more significant than what they initially indicated in their projections. We also see gold sales. According to the US Mint, American Gold Eagle coin sales were up 67% for the month of May from just a couple months ago. So individuals are beginning to try to protect themselves and prepare themselves. That's just a little snapshot that I saw this morning. Also, all the metals are higher today than from the update just on Wednesday. So we have continued upward movement, and I believe we'll see that over the next few years, just a consistent increase. Now there'll be days, there'll be weeks where things pull back, but it's in an overall upward trend. Now while I'm excited about that, I'm not as excited about the reasons why, but inflation is getting to the point that even the IMF chairwoman, chief, whatever her title is, Kristalina Georgievna, she's come out and admonished all world governments to consider issuing more currency to citizens to help them pay for higher energy and higher food costs. And so whenever a person from one of these bureaucratic organizations comes out and says that, that kind of takes the heat off of the elected officials in each country. They can say, well, this is what the experts are recommending. But we know what happens whenever the governments begin sending out free currency in one form or another, be it checks, be it electronically or cash. It doesn't really matter. It has the same effect in that it doesn't help with inflation. It helps cause it to be extended longer and become more significant. So this is the solution. The actions that have helped create the problem are being continued and expanded upon even as we speak. Now that's on the income side. On the asset side, the opposite is happening. The Federal Reserve is continuing to be dedicated to increasing interest rates, which probably they should have done a couple years ago. But nevertheless, this is where we find ourselves, and they're going to have tight conditions. The markets have already had a significant pullback, but the stock market is still at 170% of GDP here in the United States. So it doesn't seem like we're anywhere near a bottom for this cycle. So while the metals may have occasional down days in a general upward trend, stocks will have an occasional up day in a general downward trend, most likely going forward. Stocks, even bonds, are having a rare but unpleasant year this year, and real estate is beginning to be affected as interest rates rise. The value of a home, each 1% increase in interest rates requires thousands of dollars. Depending on the value of the home, it causes the price to come down to match people's new payment level that they can afford. So this is impacting all those markets. Metals is an exception this type of period. The last time we saw persistent inflation at levels that we have now was between a period of 1974 and 1988. And there was a 3-year span when they were trying to get the inflation rate down. It took them 3 years to get it back down to 3%. And that was with interest rates over 10% during that period. So we've got a long way to go before this inflation monster is slayed and put to bed. And so we encourage our listeners to consider protecting themselves and their families by owning precious metals. Thanks a lot. Have a good weekend. We'll see you next week. Thanks for tuning in.